Morning, Steve Freed in Chicago with the morning grain comments. Well, first of all, our prayers are for all those that were impacted by the tornadoes yesterday across parts of Illinois and Indiana. Secondly, the market's still trying to figure out the EPA announcements on Friday in which they lowered the ethanol mandate and kept the biodiesel mandate unchanged. It seemed like this was in more of a favor of the petroleum industry than it was in the grain industry. Corn prices overnight are lower. They were lower on Friday, and it looks like there will be potentially less corn used for ethanol in the long run than necessarily in the short run. The blend still has to meet the blend wall, but long term this could mean that a growth in that industry could be somewhat limited. The surprise was in the biodiesel that they didn't raise that. So, we could add to the soybean oil carryout unless it's offset by exports or maybe some other use. So that's a concern there. As far as the outlook on the market is concerned, after all the USDA numbers, people kind of started pushing things around, and for the soybeans are concerned, it's kind of the tale of two different markets. The nearby market could be a little tighter than what the USDA is saying because of potential for a higher U.S. crush. There is a couple of concerns about China demand, and we're going to have to watch that kind of closely, but that's what the market had felt on Friday. If you fast forward ahead to next year and farmers here in the United States plant more acres, South America has a good crop, our carryout could increase, and that's going to be bearish soybean prices. In corn, the old crop, I think that's up to the final yield. Some people have increased export demand a little bit and it's got the carry out a little bit lower than USDA's numbers, but still a lot of people think the yield's going to be bigger, so that should be bearish corn prices. Long term, next year U.S. farmers could plant less corn acres, but we could actually see a bigger yield, and so the carryout could increase next year, which still, even at these low prices compared to the last few years, corn prices could even sink lower. As far as wheat is concerned, not much change in the old crop data. We did note this morning that India did sell some wheat for export, which could offer some resistance to world prices. We're off to a good start for 2014, and if we move ahead for the wheat here in the United States and crop conditions are very favorable, we could see the 2014-15 U.S. wheat carryout increase. So that could also long-term be negative to wheat prices. So right now the glass is half full, and you kind of look ahead for 2014, could see lower prices from here. Weather-wise, U.S. should be normal to below rainfall and precip over the next 10 days. South American weather looks good for now. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.